Every country on Earth is in debt. Not some countries, not most countries. Every single one. The United States now owes over $38 trillion, the highest figure in its history. The European Union carries around $14 trillion. Japan is sitting near $9 trillion. Even oil-rich nations like Saudi Arabia, even export powerhouses like Germany and China, all of them owe enormous sums. And that leads to one question that sounds simple, but gets more dangerous the longer you think about it. If everybody owes money, who exactly is owed? Because logically, debt means someone is the creditor, someone is the owner, someone is holding the receipt. So, who is it? Welcome to Mone Matrix, where money, power, and history collide, and nothing is ever as simple as it looks. Here's the paradox. Debt isn't just a burden. Debt is the architecture of the modern world. Every war, every crisis, every boom and bust sits on top of this invisible scaffolding of I owe us. And if you follow the chain of creditors long enough, you discover something unsettling. The world doesn't owe money to one country. It doesn't owe money to one bank. It doesn't owe money to one billionaire. The world owes money to itself. But don't relax, because that doesn't mean everyone benefits equally. To understand how we reach this point, a planet drowning in over $315 trillion of total debt, nearly 3 times the size of the global economy, we need to go back to the beginning. Not to Wall Street, not to Silicon Valley, not to crypto. We need to go back to war. Centuries before the first credit card swipe, before the first digital transfer, the idea of national debt was born, not in a stock exchange, but on a battlefield. In 1694, England was fighting France. The war was expensive. Gold was running out, and the king needed money fast, so he turned to merchants, not because he trusted them, but because he had no choice. And the merchants made a deal that would change history. They would finance the crown in exchange for something powerful, a permanent stream of interest payments backed by future taxes. In simple terms, the government borrowed money today and promised to pay it back tomorrow, using money it hadn't collected yet. And to manage this new arrangement, something revolutionary was created: the Bank of England. This was not just a bank. This was a machine that allowed the state to spend money it didn't yet have. And in return, lenders received something priceless, a promise from the government, a promise that could be traded, bought, or sold. That promise became the birth of the modern government bond. And that bond was the seed of the modern financial system. France copied it, the Netherlands refined it, and the newly independent United States adopted it, first to fund its revolution, and later to expand westward. And that's when the world learned a new rule. National debt was no longer a mark of failure. It became a measure of credibility, because the ability to borrow was the ability to rule. Empires once conquered territory to extract gold. Now they issued bonds to extract interest. The battlefield became the balance sheet, and from that moment on, debt didn't disappear. It evolved. Fast forward 3 centuries, debt is no longer a temporary emergency tool. Debt has become the world's dominant export. The United States owes over $38 trillion. Japan owes over $9 trillion. And global borrowing increases by the equivalent of $1 trillion every 100 days. Think about that. Every 100 days, humanity adds another $1 trillion weight onto its future. Every country owes, every bank lends, and every citizen, through taxes, savings, pensions, is both debtor and creditor at the same time. So again, who exactly holds the other end of the rope? Let's start with the United States, because America's debt isn't just national, it's global. Out of the United States' $38 trillion debt, about half is publicly held, meaning it's owed to investors rather than to other parts of government. Now here's where people get it wrong. When the average person hears U.S. debt, they imagine one villain, they imagine China. But the reality is more complicated, and honestly, more disturbing, because roughly 2/3 of those investors are American. American banks, American pension funds, mutual funds, insurance companies. And yes, the Federal Reserve itself. The remaining 1/3, around $9 trillion, sits in foreign hands. Japan is the top holder with around $1 trillion. China follows with about $800 billion. Then the UK, Luxembourg, and Belgium. So when people say America is in debt to China, that's technically true, but only for roughly 2% of the total. Most of the debt America owes is owed to America, and that's where the story stops being economics and starts being psychological. Because this is not a straight line, it's a circle. The US Treasury issues bonds. Banks and funds buy them. The Federal Reserve often buys them back, creating new dollars in the process. Americans pay taxes that fund interest on those bonds, and those payments flow into American retirement accounts. It's a circular mirror. The debt is real, but the creditor is mostly a reflection of the same system. And once you see that, you realize this isn't just an American thing, it's global. Japan lends to the US through treasuries. The US lends to Europe through institutions like the IMF. Europe lends to developing nations through the World Bank, and developing nations lend back to advanced economies by parking foreign exchange reserves inside Western bonds. So money moves in circles. It doesn't end, it rotates, it recycles, it rolls over. It's a planetary game of hot potato, except the potato is made of promises. Every country holds someone else's IOU. Every promise is secured by another promise. It's like a poker table where every player borrowed chips from the next. And the only rule keeping the game alive is nobody stands up. Because if someone stands up, the illusion breaks. And when the illusion breaks, the entire system starts asking a question that no government wants to answer. What is money without trust? But there's a fourth layer, the most powerful layer of all, the markets. Behind every government bond sits a web of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks, managing tens of trillions in assets. They are the true arbiters of credit. They decide which nations can borrow cheaply, and which nations will pay a premium just to survive. And when they lose confidence, currencies collapse, governments fall. Entire economies can be restructured overnight. Democracy decides who governs. Markets decide who survives. And the ultimate market maker, the modern high priest of the system, is the central bank. Central banks don't merely manage debt, they manufacture it. Every time the Federal Reserve or the European Central Bank buys government bonds, they create new money in exchange. The liability of one balance sheet becomes the asset of another. And this is the part most people never understand. Every dollar in circulation represents a unit of debt somewhere else. There is no such thing as debt-free money. Every coin, every bill, every digital dollar has an IOU engraved invisibly on its surface. For decades, this loop has sustained itself through one thing: confidence. As long as investors believe governments will pay interest, even if they never pay back the principal, the machine keeps turning. But what happens when confidence wavers? We've seen it before, and when it happens, it gets ugly. In Greece, in 2010, government debt became unpayable. Bondholders panicked, yields spiked, and suddenly, Greece didn't just have an economic crisis, it had a survival crisis. The European Central Bank and the IMF intervened, but their rescue came with a price. Austerity, tax hikes, spending cuts, mass unemployment for an entire generation. Bailout became another word for sacrifice. In Argentina, repeated defaults turned debt into a national curse, and in Sri Lanka, fuel shortages and political collapse followed when the government ran out of foreign currency to service loans, and that's when the creditors stopped being invisible. That's when they become real. The IMF, rating agencies, anonymous bondholders, the people who can hold entire nations by the throat without ever showing their face. But here's the terrifying part. Even after collapse, the same logic restarts. New loans replace old ones. Old debts get restructured. The machine resets with a new name on the same balance sheet. And that's because in the 21st century, debt is not designed to be repaid. Debt is designed to be rolled over. This is the secret nobody wants to say out loud. Governments today don't plan to pay off their debt. Not now, not later, not ever. That's not conspiracy, that's policy. When you and I take a loan, we're expected to repay the principal. But governments operate differently. They treat debt like a rolling subscription. They issue new bonds to pay off old ones. Economists call it refinancing. And in that system, interest becomes the real product. The rent charged for stability. The global economy now depends on that rent, like a shark that must keep swimming to breathe. The global financial system runs on confidence, not repayment. The United States will never clear its $38 trillion debt. It will refinance it forever. Japan has been rolling over its debt for decades, now exceeding 250% of GDP, and yet its government bond yields remain near zero. So why do investors keep playing this game? Because they're not waiting to be repaid. They're waiting to renew the deal. And in part 2, you're going to understand why that makes government debt the most powerful asset on Earth. Because a U.S. Treasury bond isn't treated like a liability, it's treated like the foundation of modern markets. And once you understand that, you'll realize something even more disturbing. Paying off the debt could destroy the system. So the system does the opposite. It keeps issuing more, not recklessly, but rhythmically, like a heartbeat. And that heartbeat is capitalism itself. So here's the question you should be asking right now. If debt is never meant to be paid back, if the world owes itself, and if money itself is built on I owe us, then what happens the day the world stops believing the promise? Because that day, it won't be an economic event. It'll be a historical event. Quick recap, every country is in debt. The US owes over $38 trillion. The EU carries around $14 trillion. Japan sits near $9 trillion. And global debt has reached over $315 trillion, almost 3 times the size of the world economy. But the real twist was this: the world doesn't owe money to one single villain. The world owes money to itself. And the debt isn't designed to be repaid, it's designed to be rolled over. Now here's the part that will change how you see money forever. What if I told you? The biggest danger isn't that governments have too much debt. The biggest danger is what happens if they ever try to get rid of it. Most people think debt is like a disease, something you cure, something you eliminate, something you pay off. That mindset makes sense for a household. If you have a loan, you want it gone. But a country isn't a household. A government doesn't run on a paycheck, it runs on a currency system. And in the modern world, government debt isn't just borrowing, it's the backbone of everything. Because government bonds, especially US Treasury bonds, are treated like the safest collateral on earth. They're not seen as a liability. They're seen as an asset, a foundational asset, the kind of asset that holds the entire financial world together like steel beams inside a skyscraper. So when people say, why doesn't America just pay off the debt? They don't realize what they're actually asking. They're asking, why doesn't the world delete its safest asset? Here's why US Treasuries are different. Pension funds hold them. Banks use them as security. Central banks treat them like money. They're the foundation of the global financial plumbing. If you remove that foundation, the pipes don't just leak, they explode. Because the global system isn't built on gold anymore, it's built on confidence and collateral. And treasuries are the top collateral. They're the cleanest chip in the casino. So here's a thought experiment. Imagine Washington wakes up tomorrow and decides to pay down every last dollar of its $38 trillion debt. Sounds responsible, right? Wrong. That would mean treasury bonds disappear. And if treasury bonds disappear, banks, funds, and institutions across the planet lose their most stable asset overnight. That's not a win. That's a global financial heart attack. If the US somehow paid off its debt completely, the global dollar supply would shrink dramatically. And when money supply shrinks, you don't get prosperity, you get deflation. Deflation sounds harmless. Prices go down, right? But in real life, deflation is economic quicksand. Because when prices fall, businesses earn less, workers get laid off, loans become harder to repay, banks tighten credit, the economy freezes, and the scariest part, it becomes a self-feeding loop. People stop spending because they expect prices to fall more. Businesses collapse because demand disappears, unemployment rises, governments lose tax revenue, and suddenly, the responsible act of paying off debt becomes the trigger for collapse. So the system does the opposite. It doesn't eliminate debt, it maintains it. Debt isn't a mistake. Debt is a rhythm, a heartbeat, a pulse that keeps global markets alive. Governments keep issuing more debt, not recklessly, but rhythmically, because debt is the product that investors want. And that's why when politicians talk about balancing the budget or paying down the national debt, they're selling an illusion. The goal isn't to eliminate debt. The goal is to keep it sustainable, serviceable, and desirable. Because once belief fades, the numbers stop mattering. And the moment belief fades, interest rates spike. Borrowing becomes impossible. And an economy built entirely on rolling promises grinds to a halt. Now at this point you might be thinking, okay, if debt is the foundation, then who profits from it? Because somebody has to be winning. And the answer is the people who own the debt, not the people who pay it. Debt doesn't distribute wealth equally, it concentrates it. Because interest payments don't flow equally through society. They flow upward, from taxpayers and workers to institutions and investors that hold the bonds. So yes, when we say we owe it to ourselves, that's only half true, because ourselves isn't one group, it's layers. And the top layer owns the assets. The bottom layer pays the rent. Debt isn't just a transfer between countries, it's a transfer between classes. And that's why global inequality and global indebtedness rise together. Now listen carefully. This is where most videos turn into cheap propaganda. They point at one villain, China, Wall Street, the IMF. But the truth is more uncomfortable. Creditors aren't villains. Debtors aren't victims. They're two sides of the same engine. The modern system has turned debt into money. Governments issue it. Banks multiply it. Investors trade it. Citizens depend on it. The line between debtor and creditor has blurred beyond recognition. And that's why the system is so hard to fight. Because it isn't one enemy, it's a structure. And you can't cancel a structure without replacing it with something else. The global financial system today runs on confidence, not repayment. That's why Japan can carry massive debt for decades, even exceeding 250% of GDP, and still survive. Because investors believe the promise will continue. They don't demand the principal back. They demand stability. They demand the interest. They demand the renewal. So debt becomes a subscription. And the world keeps paying it, because the alternative is chaos. But here's the real danger. Confidence is not evenly distributed. Some nations can borrow at low rates forever. Other nations are punished instantly. The same debt machine that protects the powerful can crush the weak. We've already seen what happens when confidence disappears. In Greece, in 2010, debt became unpayable. Bondholders panicked. Yields spiked. And suddenly, Greece wasn't negotiating with the market. It was negotiating with survival. The European Central Bank and the IMF intervened, but the rescue came with conditions: austerity, tax hikes, spending cuts, mass unemployment. And for an entire generation, bailout became another word for sacrifice, because when the system breaks, the creditors stop being invisible. They become real. And they don't need an army. They have contracts, they have ratings, they have leverage. Zoom out again. The world is a loop of I owe us. Japan lends to the US. The US lends through global institutions. Europe lends through development banks. Developing nations lend back by holding reserves in Western bonds. It's a closed loop of promises. And it keeps moving because everyone agrees to keep moving. It's like a poker table where everyone borrowed chips and nobody stands up. Because the moment one stands up, someone else realizes the chips were never real. Here's the real secret of sovereign debt. The plan was never to pay it back. The plan is to keep the world believing it will. That's the entire system, a closed loop of trust. And as long as trust holds, the numbers can stretch indefinitely. But trust is fragile. And when it breaks, the system doesn't collapse slowly. It collapses suddenly. Because debt is not just math. Debt is psychology. So now we're at the edge of the real question. If debt is money, and money is trust, then the entire global economy is built on one invisible resource: belief. But belief has limits. And in part 3, we're going to answer the final question. If the world owes itself, and debt is never meant to be repaid, then what happens the day new borrowing can't keep pace with old promises? Because that's the moment the question, who is the creditor, stops being abstract and becomes personal. So let's get brutally clear. The world is drowning in over $315 trillion of total debt, nearly 3 times the size of the global economy. And yet, the system doesn't stop. It accelerates. Global borrowing increases by the equivalent of $1 trillion every 100 days. $1 trillion every 100 days. Now here's the uncomfortable truth. This system doesn't survive because it's healthy. It survives because it's necessary. Because debt isn't just something governments have. Debt is what governments are. And if that sounds dramatic, good. Because the reality is worse. Most people think money is the foundation of debt. But in the modern world, debt is the foundation of money. Every dollar, every euro, every yen is connected to an IOU somewhere in the system. Central banks create money by buying government bonds. Banks create money by issuing loans. Governments create money by issuing debt. And this is why the world doesn't have too much debt. The world has built its entire operating system on debt. Debt isn't a side feature. Debt is the engine. And engines don't ask for permission. Engines demand fuel. Here's what the global economy really sells. Not goods, not services. It sells stability. And stability has a monthly payment. That payment is called interest. Governments refinance old debt with new debt. Investors accept the rollover. Markets keep the machine running. Because repayment isn't the goal. Continuation is the goal. Debt has become a subscription plan for keeping the world calm, and the subscription must be renewed forever. Now we reach the point that no politician wants to talk about. What happens when the engine runs out of fuel? What happens when new borrowing can't keep pace with old promises? That's when debt stops being a number and becomes a weapon. Because debt is only safe as long as the system believes you can refinance it. The second that belief breaks, the price of survival explodes. Interest rates spike, bond yields surge, currencies collapse. And suddenly the question isn't, can we pay it back? The question becomes, can we last one more month? That's how fast it turns. This is the most unfair truth of the debt world. Not everyone gets the same deal. Some countries can carry massive debt and still borrow cheaply. The United States owes over $38 trillion and still has the privilege of being the world's reserve system. Japan carries near $9 trillion and has rolled over debt for decades, even exceeding 250% of GDP, yet its yields can remain near zero. But other nations? One bad year, one confidence shock, one currency crisis, and they're done. They don't get patience, they get punishment, they don't get refinancing, they get restructuring, they don't get a soft landing, they get collapse. Because markets don't care about fairness, markets care about risk. And risk is priced in real time. When the system breaks, creditors stop being invisible. That's when you see the faces behind the numbers. The IMF, rating agencies, bondholders, institutions you never voted for, making decisions that change your entire life. Fuel shortages, austerity, tax hikes, spending cuts, mass unemployment. We saw it in Greece in 2010. We saw it in Argentina through repeated defaults. We saw it in Sri Lanka when foreign currency ran out. And here's the part that sounds like a plot twist, but it's actually the design. Even after collapse, the machine restarts. New loans replace old ones. Old debts get restructured. The same engine continues, with a different label. Because the system isn't built to end, it's built to roll forward. Now let's come back to the United States, because this is where the story becomes personal for everyone. Out of America's $38 trillion debt, about half is publicly held, and most of that publicly held debt is held by Americans, banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. Foreign holders make up roughly $9 trillion. Japan holds around $1 trillion. China holds about $800 billion. Then the UK, Luxembourg, Belgium. So no, America is not owned by China. China holds only around 2% of total US debt. The truth is, stranger, America is largely indebted to itself, and that means the US debt story is not a foreign invasion. It's a domestic mirror. Here's the loop, simplified. The Treasury issues bonds. Institutions buy them. The Federal Reserve can buy them back by creating new dollars. Americans pay taxes. Those taxes fund interest payments. Those interest payments flow into funds and pensions. So debt becomes a circular machine, a closed ecosystem, a mirror that reflects itself. The debt is real, but the creditor is often the same system wearing a different mask. And that's why the world can carry such massive debt and still function. Because it's not one straight line of obligation. It's a network, a web, a matrix. But now we reach the most important truth in this entire story. The line that explains why people feel poor even when economies grow. When we say we owe it to ourselves, that's only half true. Because interest payments don't flow equally. They flow upward, from taxpayers and workers to institutions and investors that hold the debt. So debt isn't just a transfer between countries. It's a transfer between classes. And that's why global inequality and global indebtedness rise together. The system rewards those who own debt and punishes those who only pay it. Debt becomes a silent tax, not voted on, not debated, but collected every day. Now, if you're looking for one villain, I can't give you that. It isn't China, it isn't Wall Street, it isn't the IMF. It's all of them, and it's us. Because the modern financial system has turned debt itself into money. Governments issue it, banks multiply it, investors trade it, citizens depend on it. The line between debtor and creditor has blurred beyond recognition. Debt once meant bondage. Today, it means balance. But balance is fragile. And if that balance ever tips, if confidence breaks, the illusion ends, and the world remembers what debt really is. A promise that cannot be kept forever. So, the next time you hear a politician say, "We'll pay down the debt," understand what they're really saying. They're not talking about eliminating debt. They're talking about keeping the machine believable, because sovereign debt isn't about repayment. It's about trust. And trust is the currency behind every currency. The world doesn't owe money to one master. It owes money to a system that survives, only as long as people believe. If this gave you a new perspective, subscribe to Mone Matrix, because history has the answers. And I'll show you where to look.